So in this video, I'm going to be going over a trade recap that I did for my team and my mentorship group actually last week. So this was Microsoft puts. Exact option was Microsoft 1217, so December monthlies, 320 strike puts. Our fill was $4.10 per contract, which means we spent $410 per contract. Okay, so this was like a medium to large account size swing trade. Small accounts, depending on your definition of small account, this could have been a small account trade, but you might have been putting too much of your portfolio at risk for this trade. So there's a lot of really neat stuff that went down in my conviction behind this trade, and it was confluences on the 4-hour time frame and the daily time frame that led to my conviction for this trade. And there's one thing in particular that sealed the deal for me to keep holding this swing trade. Okay, so this was a 2-day hold, or a 2-night hold for the team and I, and eventually this 2-night hold led to 100% plus returns. Okay, our fill was for $4.10 per contract. At one point on Friday, this contract hit $9 or $900 per contract. That is 100+% return. Okay, so now I want to go over my conviction for this trade. Conviction for this trade is pretty clean cut, shown on the 4-hour here. We have a bear flag. Microsoft was bear flagging all last week, and then finally on Wednesday afternoon, we had a really bloody Wednesday close across the market. Tech names and SPY and triple Qs, they all bled into close on Friday. Well, look at Microsoft. Microsoft on the 4-hour time frame, this 4-hour candle closed below the support trend line for this bear flag, and that was the conviction I needed to swing puts. Now, here was the biggest, this is what really sealed the deal. This was the biggest piece of conviction that I had to hold this trade, because our profit was flipping back and forth. Okay, there was a short period of time where we were red on this trade, but eventually this went super green for us, obviously, come Friday around lunchtime. But look at this 4-hour candle right here. This is the first 4-hour candle. It's the 8 a.m. candle on TradingView. If you're using something like Thinkorswim, it's going to be the 9 a.m. candle. This 4-hour candle right here for Microsoft seals the deal. This was the retest of the bear flag. So this trend line right here of this bear flag had been support. Wednesday afternoon, or actually Wednesday right at close, this support level broke. Well, come Thursday morning, buyers are retesting the support line, except now it is now resistance. Old support has turned into new resistance, and look at this rejection that Microsoft gave off of this support line. Actually, now resistance line. Excuse me. Also, right above this resistance line, you have the three key EMAs. These three EMAs, the 9, 21, and 55 is what I use. They are acting as technical resistance. So not only do you have a trend line that is now new resistance, you also have the moving averages acting as technical resistance. Those are two very, very hard things for Microsoft buyers to push through and break price above. It was an easy rejection. I watched this rejection happen Thursday morning, and yes, it chopped it up on Thursday all day, but keep in mind the option that I chose. I chose December monthlies, and they were out of the money for a reason, because they were going to give us the best chance of this trade being profitable. Okay, it was to maximize our chances of profitability, and yes, it was more on the expensive side. I'm known for small account stuff, but this trade I knew was one that could hit, and this 4-hour candle right here sealed the deal. This was the rejection that I needed to see, and it led to my conviction to holding again over Thursday night. And then, of course, you can see this very bloody first half of the day 4-hour candle for Microsoft, and our 320 puts actually went in the money on Thursday. Okay, this was the rejection off of the 4-hour time frame that Microsoft gave us, and it was just a one more night hold, and it was picture perfect for us. Okay, now this is also only the 4-hour time frame. I also use the daily time frame here. Okay, so that's my conviction for the 4-hour time frame. Here's the daily time frame here, and let me rearrange fibs real quick for me. All right, let me get rid of that real quick. All right, so here's Microsoft on the daily time frame now, here's the bear flag that I just showed you. Here's the biggest thing. Sellers showing up above this 78.6% fib level for Microsoft. This was huge to see. Okay? This is Wednesday, my bad, and this is Tuesday. Both Tuesday and Wednesday of this past week, sellers showed up and pushed price back below a key fib level. Okay? If price is unable to close above one fib level, then following fib rules, price is then going to fall back down to retest the following fib level. Well, that's literally what we got. Okay? Back-to-back days of sellers showing up and forcing price back below the key fib level. Look at the long upper wicks right here. There was clear buying pressure at one point where price was trading up around here, but sellers came in and pushed price back down 2 days in a row below a huge daily fib level. Following fib rules, price is now going to retest the following fib level. To combine that, look where these daily candles close. 2 days, Tuesday and Wednesday, of closing below the 9 and 21 EMAs. The daily 21 EMA in particular is huge. Now, look at Thursday's daily candle. Okay, remember on the 4-hour time frame, I just showed you Thursday. Again, the daily candle shows the retest of that bear flag. Look at the long upper wick on this daily candle. Solid rejection. And look where, coincidentally, the 9 EMA is. The daily 9 EMA is right there at this at this old support level, new resistance for this bottom support line of this bear flag. The 9 EMA was also sitting right there. So on two different time frames, old support is now new resistance, and technical resistance was in play with all 4 EMAs right there on the 4-hour time frame, and the 9 EMA was sitting there perfectly on the daily time frame. Also, another rejection at price trying to get above the 78.6% daily fib level. And then, of course, following fib rules, look what ended up playing out. Price literally tested the following fib level, which was 61.8% fib level, and our options actually went in the money. So 323.15 was my second price target. That was smashed on Friday, and then our options, of course, went in the money. Okay. Not to mention, look at this volume bar that we got on Wednesday as well. So Wednesday was the day that I entered. Look at this massive volume bar. Okay, yes, it wasn't as big as Tuesday's volume bar, but this volume bar on Wednesday also helped add to my conviction. So we have a bearish sell signals on the daily time frame, and then of course we have bearish signals on the 4-hour time frame, and that in of itself, the bearish confluence is lining up on two big swinging time frames. That was all the conviction I needed to swing puts. All right. So if you have any questions about what my thought process was, my conviction behind this trade, etc., please leave them in the comments below. I will be more than happy to answer you. But if you are interested in joining my team, there will also be a link to my server in the description below.